Prime Minister Mark Carney and Alberta Premier Danielle Smith have signed an energy deal which includes a pledge for a new bitumen pipeline that would go through British Columbia to the west coast. The pipeline would open the export of oil to Asian markets and suspend a number of environmental regulations for Alberta. Let's get more now from Danielle Smith, the Premier of Alberta. Premier, thank you very much for joining us.
Yeah, my pleasure.
Is this the next step in a journey of about 1,000 kilometers? Is there still a lot to go?
Well, I can tell you that Alberta had 10 pretty bad years with some terrible laws that really dogpiled on our oil and gas industry and quite frankly looked to us like they were intended to shut in our major industry, which is not only vital to our economy, but to the economy of all of Canada. And with this agreement today, we see that the federal government under Mark Carney is prepared to take a different approach. And we're pleased to see that. The removal of the emissions cap on oil and gas, I think, will give additional confidence back to our energy sector so they can expand production. Ultimately, expanding production will make pipelines possible, as well as the elimination of the clean energy regulations applied to our electricity sector should result in reinvestment in natural gas energy production, which we hope will fuel an AI boom. So those are some pretty key elements to it, not to mention the commitment to work together on getting a new 1 million barrel a day pipeline to Asian markets and have a carve out on the tanker ban to make that happen, as well as developing additional infrastructure for carbon capture, utilization, and storage. I mean, I had a big list of things that I wanted to address, and most of them have been ticked off.
Now, there's some things you have to do. The carbon price, industrial carbon pricing is going to jump to $130 April 1st. What kind of an impact will that have? Any concerns about that? And also the promise, your methane reduction by 75% relative to 2014 levels in 10 years. Are these achievable, and what kind of an impact will they have on business?
Well, a couple of things. I think that the stringency, how quickly that price will rise to $130 is something that is going to be negotiated and announced on April the 1st. You have to remember our starting point was that the prior agreement would have seen the price go to $170 by 2030, which I think both Canada as well as us recognize was too fast. So we'll have more negotiations on what that stringency looks like and what the ultimate price will be, and we'll make sure that our industry knows that in due course. On methane reductions, we've made incredible strides. We've reduced methane emissions 45% below 2014 levels. We did it 2 years early. And so in our emissions reduction and energy development plan back in 2023, we had set a target of being able to get to 75% by 2035. So the federal government has aligned around that target instead of the more stringent one they were looking at by 2030. What I think is important, and I mentioned this to the Prime Minister when I first met him, is that if we could align around a 2050 target, I think that we could really work together. And that's what we've done. If you look at the nations of the world, most of them have a 2050 target. China has a 2060 target. India has a 2070 target. And so this allows for us to have the incredible wealth of our oil and gas sector, using those dollars to develop a technology that is going to decarbonize many industries. And I think that's the right way to go.
And now, getting this built, the private sector interest, is it there? We haven't seen a lot of people jumping forward and saying, well, is there interest there to help build this?
I would say that what we have seen, which is really encouraging, and I think it came from the federal budget where they indicated that the emissions cap would not be implemented. Enbridge announced that they want to expand their mainline 400,000 barrels. TMX announced that they wanted to expand their pipeline capacity by another 400,000 barrels. South Bow, which owns the old Keystone assets, wants a new 650,000 barrel a day pipeline. There's projects potentially for oil by rail. There's other ports that we're looking at, whether it's in Thunder Bay or whether it's James Bay or whether it's somewhere else on Hudson Bay. I think that what you're going to see is that a lot of that production will come on stream, which creates the demand for new pipelines. Our personal view is that the best opportunity for us to diversify our markets is to have another pipeline going to Asia. And that's what I'll be spending a lot of time doing in getting that to a point where we can put it on the major projects list. And we'll know then whether a private proponent will step forward. I hope they do.
And if there isn't private, will there be public money going into this?
The agreement says that we want a private sector proponent, and I agree. I mean, if we have to have the federal government build another pipeline, I think that's a failure of the exercise. The whole exercise we're going through is to restore investor confidence so that private sector dollars will be invested in these kind of nation-building projects. That's my anticipation. That's my objective. We know that we as a government need to get it started because there was such a lack of trust on the part of the industry, many false starts on investing in projects where the rug got pulled out, whether it was on Keystone or Energy East or Northern Gateway. And so we believe that by being a partner with industry, that we can get it to a point where the private sector will have the confidence to complete the job. That's what we're working towards.
Okay, now Enbridge and Trans Mountain are investing hundreds of $millions in measures aimed at increasing their appetites for the existing lines, with a recent TD Cowen report suggesting that they'll add the equivalent of a million barrels per day of shipping capacity. Is there even a need for another pipeline?
I certainly think there is. I mean, I trust OPEC's expectations when you look forward into the future to 2050, that the world's going to need a minimum of 123 million barrels a day. I think we're at about 104 million barrels now. And we want to be a growing share of that growing market, especially since we're going to have the lowest carbon barrels. We think that'll be an advantage to those in Europe as well as those in Asia who value a lower emissions product. And so we know that we have a world where 700 million people don't have access to affordable energy, including electricity. And we've got to bring the billions of people on the planet who have a lower standard of living up to the same standard of living we all enjoy. That's going to take a lot of energy. And that's what I think the dual approach should be, that we've got to reduce global poverty at the same time as addressing issues of emissions. The language people are using now is that we're in a period of energy addition. There's going to be all types of new energy that come on stream, but I think oil and gas are still going to be the backbone. And with some of the decarbonization projects that we're investing in Alberta, I think that will give us an advantage in that market.
Okay, now, not everybody is for this. You've had David Eby, your next door neighbor, concerns about this. Indigenous groups have said it, yet there's supposed to be a co-ownership with Indigenous groups. How are you going to get them on board for this?
Well, we've had success with co-ownership with Indigenous groups in the past. We've got $750 million worth of projects, including pipeline projects, that have Indigenous ownership because we've given a loan guarantee. We have a capacity to go up to $3 billion worth of loan guarantees. The federal government has a similar type of program, as does British Columbia. So that's what we're beginning with, is saying that we want substantial Indigenous ownership along this line. And for my friend David Eby, he and I had a conversation yesterday. We're going to agree to disagree on certain things, but we're going to work together on other things in the MOU that where we have a common interest. Expanding TMX, which he is supportive of, it's additional LNG development, which he of course is supportive of, ammonia, interties, as well as investment in nuclear, and perhaps even getting ammonia to the Port of Prince Rupert or one of the other ports. Those are the kind of things that I think we can work on together. And I'll continue engaging with Indigenous groups along a proposed future route to see if we can secure that Indigenous ownership stake. That's what we're working towards over the coming months.
Okay. Last question about the tanker ban itself. There's going to be exceptions, but there will likely be challenges. This could drag on for years, could it not?
I would say that there's a number of projects that are likely to go ahead very soon. All of the expansions that we were talking about and the optimizations, those could take place in the coming years. Obviously, getting the project on the major projects list is one step, but then there's a 2-year approval process that we would have to go through after that. And then there's all of the technical aspects of doing the construction, which of course could take years. But you've got to start somewhere. You have to start with the approvals. And that's why we're going to be investing a lot of time in figuring out the technical aspects, building the Indigenous equity stake, and then hopefully getting it on the major projects list. But the nice part is, with all of those 9 bad laws addressed to the satisfaction of the industry, those other projects are going to be able to go ahead. And that wasn't the case yesterday. The fact that we had a room full of about 150 business leaders who were pretty excited says to me that there's going to be many projects that are now going to be able to proceed. But
do you not see challenges coming to the lifting of or partial lifting of that tanker ban?
Well,
that would slow this down?
I can tell you one of the things that we were surprised by. I mean, the TMX construction dramatically reduced the differential on our Western Canada Select. And I think that demonstrated that having more than one customer is really important, not only to our province, but to the entire country. And that's why we've embarked on this to begin with. We know that being over-reliant on the American market has created some instability. Only having them as a customer blew out our differential and was costing all of us money. And we now know that there's an appetite in Asian markets. China has purchased oil from that line. Korea has purchased oil from that line, and they want more of it. And so we think that there's going to be an important market case to be made. And if we want to open up new markets, that's the place to do it. So that's why we're committed to doing it, not just for us, but for all of Canada. Okay, Premier, we're out of time. Thank you very much for joining us. You bet. My pleasure. Danielle Smith is the Premier of Alberta.